Hi, everyone. Today we have an amazing investor who is an experienced senior executive with 30 years of successful investment experience. She's been nationally awarded for her abilities to deliver top quartile results through innovative portfolio management strategies and has distinguished herself as one of the most powerful chief investment officers for several years running. She has significant expertise in private market investments and alternative asset classes, including investing in startup companies and local initiatives. She is the founder and managing partner of NVNG Investment Advisors, her new endeavor, which is Nothing Ventured, Nothing Gained. Welcome to SheVC. I'm your founder and host, Gayatri Sarkar. Co-founder and managing partner of NVNG. Super excited to welcome you, Carrie.
Well, thank you. I'm blushing at that introduction. It's very nice.
I know you for quite some time, and you are so amazing. You have been in the investment market for so long, for around 30 years, and into the private equity market, eventually overseeing all the asset classes, including public equity markets. You have been in the state of Wisconsin Investment Board, which is an asset under management of $117 billion. You have been at Wisconsin Alumni Research Foundations and now managing director and partner at NVNG. So how has your multi-asset class investing experience shaped your investment theses in the private venture market?
Thanks, Ketchy. I started off in the private assets. I loved the private assets and eventually, found myself in the multi-asset class. And as you noted, I've returned there. So, when I look back and go, how did I make that journey? Ultimately, the private assets were where I started and what I loved. I think it's the tangible nature, the long term that works well. But when I look at how does that experience influence what we're doing today, when you look at multi-asset and being a CIO, they're universal things that you're dealing with. You're in every investment strategy, you're looking for an inefficiency. You're looking for a strategy that is designed around that. You want to see a team that is appropriate to execute it. And you want to see all these things in place and then the governance and the infrastructure supporting it. So despite, whether you're talking about being in a hedge fund or real estate, these are the things you're looking for. And I think having the multi-asset class gave me the exposure to just, as I noted, we were engaged with hedge funds and we had real estate managers. And so there was just this great variety and depth of investment talent that we got exposed to along the course in seeing the really creative ways that people engaged in markets, how they executed. People are really creative and innovative, and ideally, we're using that influence as we go and put together NVNG and try to focus just on the venture asset class. So I think it was a journey from starting in the private markets, going pretty broad, just getting, kind of a whirlwind career, if you will. And now going back, I really want to hone what I know and take it down to a single asset class.
I love that answer. And you have seen it all, Now, when you're looking particularly from your angle at NVNG, what's your investment thesis?
As I hinted at, we are building our firm around the venture capital asset class. And for those people who don't know WRF, one of the places I was before, it's the tech transfer arm of the University of Wisconsin-Madison. And that university is one of those old land-grant universities that has over $1 billion of research every year. And part of that organization's mission is to move that technology out to better humankind. So venture is a key part of that. And so I always had my hands kept in venture and love the asset class. So what we wanted to do was largely take what we were doing at WRF and target under-ventured groups, if you will. Be it maybe firms or organizations that are too small to get venture exposure themselves, or maybe they're just big and they want a niche exposure in the Midwest, for instance, and it's hard to do that. Also, we found, given what we did, the strategic nature, which is moving technology, that there was a lot of power of venture capital in helping move innovation. So these are groups that wouldn't normally engage in venture. And so what we thought would be great was, could we take what we've learned at our days at Wharf and apply that on a broader scale so that we're bringing venture exposure to a much wider audience that before wouldn't have thought that it was within reach for them. So we find that we have an efficient vehicle. We're trying to build a vehicle such that you get the exposure and the access, that the transparency is there and normal financial investors wouldn't necessarily look for. So for us, it's as simple as saying, love the venture capital asset class, what it can do to transform economies, what it can do to transform lives, and let's just bring that to a broader audience.
I love that answer. And I think I have not heard many fund of funds talking about the Midwest startup scene. So can you elaborate more about the new market opportunities that the Midwest startup scenes they're bringing, and how has the market changed in the last 5 years?
When I go back to when I was in the Midwest market scene, it really went back to my days at the state pension fund. And it was a limited pool of investors that tended to invest here. Most of the capital came from the coast, and that's where we invested. When I didn't pay attention to how much it evolved, if you will, over the ensuing years and became the CIO, and someone else was tasked with the overall portfolio management. And in the last 5 to 7 had looked back and said, how do we get more VC in Wisconsin? And just was amazed by the change, frankly, the amount of venture dollars that exist here. And it's still a small fraction. So there's a lot of room to grow as venture has moved from the coasts and it's coming inward. What you see is it's different. It's Midwest venture. It's not going to be the coast tech, as I alluded to. You have a lot of these land grant research universities here that have just billions of dollars of innovation happening and no one kind of looking at that. So a lot of the venture is targeted towards that. It's there's a quote I have. It was that we got from one of the venture funds that we're talking to, and it says it's that today all of the returns come from the application of technology to traditional industry. And the Midwest has a huge advantage there because there's a lot of built-in traditional industry here that is now using tech. That's just trying to figure out what they're doing. So what we see is a lot more activity going on, a lot more connections and networking being made. And it's still just, I think, very early innings of this. And so we're right here in the middle of it. We know the players in our neighborhoods and in some of our states that are surrounding us. And we're just hoping to make a connection and start to raise the profile, I guess, of the Midwest as a place that you can successfully invest venture in.
I love that. And I think since you're looking at different patterns and how technology has infused that change, and rightly said that venture capital is all about identifying patterns, and yet some of the bigger ideas are unpredictable, and sometimes those investment decisions can be non-consensus among partners. So I would love to know, to invest in such unpredictable big ideas, one has to learn and see things differently, analyze market that others don't necessarily find exciting. So I completely believe that you agree with that. How important are those patterns to NVNG as a fund and fund of fund?
I think the premise of our patterns means they're very important, but I would suggest that we're not the group that's going to see them. So we are the fund of funds, and we'll pick out the venture managers. And in believing that those patterns are there and they exist, what we hope to do is engage those strategic investors, perhaps those traditional industries who are trying to see those patterns, who perhaps want to be the disruptor or avoid being disrupted. The idea is to engage them with professional venture capital such that together those two groups can identify where the patterns are. And that our role as a firm is to be the one that connects, that allows those patterns to emerge, if you will, because it's not my expertise. I don't run a manufacturing company. I don't know necessarily what's coming around. I'm not the tech person. But what I can see is the power of venture capital to help the people who are on the ground running these organizations identify patterns and maybe jump on them and help exploit them to their advantage or mutual advantage, hopefully.
I really love your answer, what you talked about identifying patterns with venture capital. So how the use of venture capital has changed with corporations, creating innovation teams, developing corporate venture funds, and becoming broadly much more involved in venture capital on a strategic basis. So would love to know your take on that.
Uh, I think that the idea of having an innovation team or a corporate venture capital unit is quite widespread. And it has existed for a long time, either in big tech companies or on coast, but you didn't see it as much in the Midwest. And so what we have noticed a few years back was that it was becoming as ubiquitous, or at the very least, there was this emerging movement in our state where an innovation group was coming together to meet and talk. And it all seemed like everyone was kind of in the early days trying to figure out exactly how best to execute there. So the growth is high, and we don't expect that to change. I think there was a question with the current recession: would they pull back, because that's been the pattern? Corporates get engaged, and back when I had started early on in venture capital, there was, the assumption was that you didn't want a corporate because they perhaps could, scare away other strategic investors, or maybe they didn't have a purely financial aspect to what they were doing, and so they might make suboptimal decisions. And I think a platform where what you give is the exposure and the access, and you remove those conflicts, can really work and open up the benefits, which is what they're seeking. The visibility, maybe talking to a venture capital group about what they see in the market, sharing their expertise from their operator's role. I didn't really even touch upon, even in innovation, the idea that we were part of a tech transfer office, and a lot of universities have tech transfer offices that do not have, billion-dollar foundations tied to them. So they do have an endowment tied to them, but maybe they didn't utilize their venture connections to engage with their tech transfer office. So the idea that there's more power and more to be gained by using venture strategically, I think has a lot of room to run, and I hope to be part of making that happen for organizations of all types as they figure out how do you engage in the innovation when it isn't maybe a core competency that you have. It's not like everyone 10 or 20 years ago here had innovation teams that were fully staffed, and so that they sort of know exactly how to execute.
Yeah, totally agree. And I think we are seeing a lot of changes that are coming with COVID-19, and now technology is changing the investment landscape. Now, as a fund manager, there's always the question on what is a good expected return. So achieving expected returns is not simply a function of high multiples, and it depends on the risk profile and time invested and stage of capital deployment and overall market. So now when you are a fund of funds, how do you navigate those questions?
The way we navigate the questions is, we're looking for investors that are almost dual purpose, right? They want to engage because it's something they can't do on their own. So from our perspective, it's less of a fee discussion than as a value add. If you don't perceive value add in accessing venture through our group, you're probably not our ideal investor anyway, because you have the capability to do it on your own. Venture has a nice high return, and if you're going for the purely high return, then building your own program may be what makes the most sense. But if you're, for instance, a strategic investor, a corporate, the question is, do I want to build the capability to go out and vet all these funds to get into the most relevant ones? Or what is it I'm really searching for? Do I really just want the talent of the venture capitalist, and I want the companies and the portfolios they're building? Because in that case, you can view it as a replacement for building an internal team, and it's less about minimizing fees, which is what we did when I was a CIO. You would try to find the most efficient vehicle. We would separate the active management decision from the passive decision. And in those cases where you couldn't do it, you had to go to active management, and you paid a little bit more fees. But if you could separate it, maybe you went with the most efficient way to get your exposure, and you found your active, it's just a question of execution. And so from our perspective, for people who have a strategic interest, they're going to get the financial return. They'll get the access, and however they perceive value from that exposure to venture, that's the kind of, it could be quantifiable by dollars. Maybe it's the merger and acquisition they do someday, driving revenues. Maybe it's a cost reduction, but that's how they will come up with the justification internal to that organization that makes sense, that they'd want to go ahead and enter into, this, the kind of fund or exposure that this would give you.
Totally agree. I love your answer, what you said. So you being an LP for such a long period of time, I would love to know your take. What advice do you want to give to all the LPs out there who are investing in the venture capital landscape now, considering there's so much of uncertainties in the market? So your advice will be highly valued.
Oh, thank you. It's a good question. I guess it's a tough one. It's probably uniquely personal to everyone as to why they want to engage in venture. And, in my history, we had a much larger allocation because it meant a lot to what we were doing on the other side of the business. So I suspect for folks that we would like to work with someday, the advice I'd have is that what we found was the more that you put into it and engaged was the more that you got out of it. And you don't want to also underestimate how much value you can bring. And the platform that we would like to build, it unlocks that value because as a strategic player, you have insights and knowledge that a venture capital firm perhaps might not, or a portfolio company might not. And that, to me, the beauty of bringing strategic capital in this way and engaging it more broadly is that there's so much expertise there, and you can become a customer or beta type, add value to a startup that it might not get any other way. And for a long time, I was a financial investor, so in no way do I want to diss financial investors. They play an incredibly important role, but they're primarily seeking a financial gain. And, a strategic investor for sure will like they would like a financial gain as well, but they have the ability to bring an expertise and a knowledge. And I would make sure that, if I were entering into this kind of a fund, I would bring that with me and try to get all the value I can out of it, because we found at WARF that worked really well, and people liked engaging on campus, and we liked being the group that helped facilitate that engagement because it's a huge campus and we had the ability to add an efficiency where an inefficiency, I guess, existed. So
Love
that
that.
answers exactly it.
Totally love that. And I think one of the unique nature of your fund is that you have two co-founders who are women. So I would love to know your take on the diversity mandates, because there are not many fund of funds where we see two co-founders or women coming together and building these opportunities in the venture capital space.
Thank you. It's probably just the reverse almost of non-diverse when people talk about, Linda and I knew each other, liked each other a lot, and we're really comfortable with how we work, and we have similar styles. We do have a third partner, an individual, a young man who used to work for me at WARF. So we have diversity of age as well. I approach diversity, I'm not quite sure I have great answers around these questions. We've struggled with them myself when I was a CIO, and what is the appropriate way to approach this. I like and always sought to build teams that had diversity of thought. It kind of sometimes came from just where people were born and raised. And, I would admit that in the day I would have said, I had a largely male team, and would have said that was because that's who, applied for the job, and hidden behind that reason. If I had to do it again, I would suggest to myself that I look in different places for different people. Not easy in the Midwest. It's a pretty homogeneous, place, but that doesn't mean it can't be done. And we were able to usually get some diversity from geography on our own team. When it came to who we were investing in, that was tougher. It's tougher to see groups coming up. And I think that now I would look for the question of, where are you bringing diversity into your firm, and truly doing it, because most investment management is a bit of a mentor and apprentice industry. And so what you want to see is that the efforts are being made to make sure you have more inclusive hiring. I don't want to see people just putting, someone out there to say, oh, look, we're diverse. You really want them to honestly believe there's value add. Because I would get approached sometimes from people who'd be like, we're an all-woman firm. And while I appreciate that, and unless it's key to what your strategy is, that probably doesn't move me. Or it didn't. And to this day, it might not. So I don't think anyone should be moved by the fact that Linda and I are females. I think they should be moved by the fact that we do a good job, and they should probably recognize that we will approach things differently than maybe the other people, and they should have a diversity. But like every other person, we all want to be, evaluated against the standards and be just considered the best just on our own.
I love that. And I think I cannot believe I'm coming to my last question. And I want to quote you. You have said that it isn't just a work-life balance question. There's a general diversity question that is on the table right now, quite possibly arising from the inequities of COVID, with who is being economically harmed, who is taking on the housework burden, and how do we move forward? So quoting you, I'm just want to ask you, what's your theory on work-life balance? Because I think COVID-19 has kind of hit us at the center, and that work-life balance have become blurred. It feels like we are almost living at our workplace.
I have been fortunate not to live at my workplace, so I haven't been living it now, but work-life balance is something that, as we discussed earlier, you and I discussed, it's a tough thing to achieve. And I don't know, I think someone had told me, it was Ruth Bader Ginsburg, who said you can have it all, just not at the same time. And I don't know if maybe, I just didn't do it right, but it's something that I would wholeheartedly agree with. And maybe it's a female thing. I don't know. What I would say is I could be, it's very hard to be great at both things. Like I've always felt like I was a good mom and a good employee, but it was hard to give both things. I could see my friends who stayed with their kids and could work with them and do the homework. And it just wasn't something I had the time, or frankly, maybe energy to do by the time I get home at 6 or 7 at night. And I had 4 children. And so it was really tough. And so I sometimes question and wonder whether I did a great job. So if everyone is now sitting at home, and in some cases, I don't think it necessarily has anything to do with, dad or father not wanting to help. Kids just sometimes go to mom, and they become the go-to person. And I one time read an article about someone being a go-to person. And if whoever you are in that position right now, being male or female, it's tough if you can't get away, because you are the go-to person that the kids go to. And without having distinct boundaries as it's time to go to work and kind of get away, it's incredibly hard. And if you don't have help, if you can't have a nanny at this point, then doing your job really well gets all that much more difficult. And I think that was what I was alluding to on the sort of economic realities, and being able to recognize that that's actually the case. I was talking to someone is in the community, and they were talking about their workforce being remote, and they had a couple places where they were having issues, and it tended to be, the issues were related to the inability to kind of separate the kid duty from the work duty, because the kids just don't respect that boundary, neither do dogs, I guess. And so I don't know that there are any, in most tough problems, there are no easy answers in life. It's just one I think you recognize and you try to do your best to manage around. I'll go with, hopefully this isn't become a new reality. Maybe it does introduce more flexibility. If we go back to an earlier question, I think what it does increase is the ability to say, well, let's have some remote work. Let's start this company in the Midwest, and maybe part of our staff is out on the West or East Coast, but not everybody has to be here, and it makes it more feasible. So there could be upsides to all of this, and maybe it's just ultimately having honest conversations around things that we haven't before, when you try to decide who's got to take off work to go bring the child to the doctor's visit.
I totally agree with you. I think with this distributed workforce now, people doesn't have to concentrate on Silicon Valley or East Coast. Now they can be also at the Midwest, start their companies. And I hope NVNG be the go-to fund of funds for most of all the venture capital funds in Midwest and outside Midwest also.
Well, we hope for that same thing too, Gayatri.
Thanks a lot, Carrie.
Thank you for having me. I appreciate it. It was fun.